please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters, the show we're going to highlight all the buzzing stocks of the day. It's been a volatile morning. We started off well in the green, but we have given up some part of those gains, and currently the Nifty is holding with a gain of only around 20 points. The mid-cap and the small-cap index, that's where the pain it is. And in fact, the Nifty Bank continues to see some selling pressure from the top. Hi, Mangalam.
Hi, Nigel. You know, it's a Friday morning, and I think it's the mid-caps which is feeling a little jittery because they opened with a green line on top, then they went ahead. The first hour itself, there was a kiss, and now the red line is on top. So we'll keep an eye out on that. But as of now, you know, we're seeing a bit of a sell-off in the mid-cap space. Let's actually welcome Ashwani Gujral himself, the Nifty Bank. Ashwani, you know, earlier it opened in the green, and you said the first trade would be to go ahead and short it. Now we're in the red for the Nifty Bank, down about 10 points. How much lower do you think it can go? And in the mid-cap space as well, how much lower do you think that can go?
See, yesterday's rally failed, today's rally failed. Now, you know, it's very simplistic to say the problem is only PNB, rest of the system, etc. is fine. My sense is that people are selling financial sector because, you know, possibly there are concerns of systemic risk, etc. So that weightage is coming off, and that's probably going into the IT space. Now, you know, new leaders are joining on the downside. Today, autos, Maruti, Eicher, etc., they have joined on the downside. So definitely, I think the markets are moving lower. Even now, if you go short, I think this should be a reasonable trade on the downside. What's happening is every morning we gap up because of global cues, then we can't hold on. So it's, you know, basically fodder for the bears. They were waiting for this gap up to happen. And I think we should head quite a bit lower from here, maybe at some point even break the range. As far as individual stocks are concerned, Yes Bank is a sell with a stop of 325, target of 308. SBI is a sell with a stop of 281, target of 265. And HCL Tech you can try to buy with a stop of 956, target of 980.
Quick question. Shorting the Nifty and the Bank Nifty is what you're suggesting? And just if you could give a rough target over there for the Nifty as well as the Nifty Bank. It's worked out till now. We started off in the green. You suggest shorting it, so you're making money. But what targets are we looking forward to?
Let's say yesterday's low is the first target. And on the Nifty, while that will fall a bit less, so if I have to choose, I'll go with the banks. But I think Nifty also at some point you should test 10,450, 10,460. Now, since yesterday, mid-caps have started falling. So all this, you know, comfort that people had that, okay, fine, the markets are not falling anymore, I think that is somewhere getting lost. And if you start seeing this repeated market breadth of, you know, 200 advancers and 1,400 decliners, I think that will also have its own impact on the market, and that will hit trader sentiment quite a bit. So that's where, you know, I think the mid caps, which are outperforming the last few days, they have also turned yesterday.
All right, Ashwani, you know, thanks a lot for joining in and giving us all that perspective. Your point is well taken. The banks are under a bit of pressure. You have a sell call on both Yes Bank and SBI. Pull up ICICI Bank. That one opened in the green and now has moved to the red terrain and currently trading very close to the low point of today's trading session. And that's adding a further drag on to the Nifty Bank as well. But important flashes on your screen just before this. The MSCI, they've condemned the move coming in made by the Indian exchanges. Remember, earlier we had this move coming in from all the exchanges, and that was to ban the supply of data to SGX. And they believe it is clearly a negative development for the accessibility of the Indian equity market for international institutional investors. MSCI says the restrictions are inconsistent with the practices of any other market in their emerging market index series and could result in unprecedented disruption of trading in financial products in markets around the world. The exchanges also announced the imposition of a written pre-approval restriction on the issuance of certain ETFs and ETNs or similar products based on indices, but the full scope of restriction is not yet clear. Based on the exchange's press release that came by yesterday, or a few days ago rather, last weekend that was, MSCI now understands that the exchanges do not seek to impose a disorderly wind down of the various products that would be affected in any markets around the world. Nonetheless, given the breadth of the application changes referred to in the announcement, MSCI believes that if these changes are put into effect, the result would be disruptive. Tell you what, Nigel, MSCI very closely tracked globally, nearly $2 trillion. I think about 10% of that is in emerging markets. Around 10% of that is in India itself. So we're talking about what, 1 lakh crore rupees?
Well, that's right, Mangalam. In fact, under MSCI's market classification framework, anti-competitive measures receive a negative score in the competitive landscape category because of their negative impact on international institutional investors, as the range of the available financial instruments may be significantly reduced, limiting ways for cross-border investors to access a local market or to hedge an exposure to a local market. MSCI further warns that the measures may result in a change in market classification and strongly suggests that the Indian exchanges as well as SEBI reconsider this unprecedented anti-competitive action, Mangalam.
That's right. We just did the rough math. $2 trillion globally tracked, of which around $200 billion would be the emerging markets. 9.5% is India. So that's $20 billion. If they reduce the weight by even 1 percentage point or half a percentage point, that means about 500 to 1,000 crore rupees getting off the Indian markets just because of this regulatory change. So that is something we'll have to keep an eye out on.
But if they make this known and they make it more accessible, then
will they increase? That's the big question. That exactly is the big question. I think
that was Jake's argument just a couple of days ago.
There are arguments on both sides. Let's see how that goes about. What we'll do is slip into a short break. Let's take it straight to the management who is waiting by. That is Snowman Logistics. Stock on our radar on the back of a good third quarter numbers, primarily because the company broke into the black on the bottom line. We're joined by the CFO of the company, Mr. Sundar, on the phone line. Thanks a lot, Mr. Sundar, for joining. In third quarter, you've made a profit of close to 27 lakh rupees. This compares with a loss of 2 crore rupees. Earlier, I remember you telling us that you want to become profitable in FY18 itself. First 9 months, on the bottom line, there is a loss of 5.5 crores. So becoming profitable in FY18, is that a tall ask? What do you expect to end this year with? And FY19, what are we looking at in terms of the bottom line performance?
See, catching up with the bottom line gap is going to be a big challenge. We will have an improved Q4 performance, and it will be definitely a profitable quarter. But whether the year-end numbers are going to be in the black, it's still, we are not very sure about that.
Q4 is traditionally strong for you. So you think you can do about 1.5 crores on the bottom line in the fourth quarter?
We are aiming for something like that.
All right. So you should end the year with a loss of about 3.5 crores.
Maybe less than that.
Yeah. All right, Mr. Sundar. So, so FY18, well, we once you turn profitable there, but FY19, you're sure we're going to see a net profit number for the financial year, correct?
Yeah, sure.
Okay, you're sure about that. So we're going to hold you on that one. But what about your operational performance as well? For the first 9 months, you've done what, 140?
Yeah, sure.
Okay, you're sure about that. So we're going to hold you on that one. But what about your operational performance as well? For the first 9 months, you've done what, 142 crores approximately. Margins, they've been all over the place. But this quarter, the margins have been more than 25%. If you could help us out, what you're looking to end this year?
See, improvement in...
Yeah, Mr. Sundar, I'll just finish my question, sir.
Sure.
You're looking to finish this year with a number of close to around 200 crores. Is that correct? If you could correct me on that one, what kind of margins are we looking forward to? And more importantly, FY19, how is it looking? Go ahead, sir.
200 crores top line. And as far as margins are concerned, Q3 came out very good improvement over Q2 as well as the previous year figures, mainly because of the improvement in margins in the main warehousing business.
Yeah.
In warehousing, as far as EBITDA margins are concerned, we ended the quarter at 34% EBITDA margin as compared to 28% of the previous quarter. And even the other verticals, the transportation came out with improved performance.
Right. So
as far as warehousing is concerned, we are confident that this is sustainable and should improve from here.
All right. So, Mr. Sundar, the line was a little scratchy. You said that we'll end this year with a number of close to 200 crores?
Yes.
And margins we are working with on a blended basis?
On a blended basis, currently we are at 26% EBITDA margin.
You can hold on to those levels?
We can hold on to this.
And FY19, you can do a 10%, 20% growth. What do you have in terms of an internal target?
Internal target, we are definitely looking at profit as well as improved margins in each of the verticals.
And revenue growth?
Revenue growth, we should expect at least a 10% growth.
Okay.
All right, FY19 revenue growth at around 10%. If you could give a word on the debt of the company, because, you know, last time you said you are incurring about 60 crores on the capex front in FY18. You had a debt of close to around, what, 110, 120 crore rupees?
Yeah, currently debt is around 140 crores.
140. So
And we are repaying, we have started repaying most of our loans. But if we decide on an expansion, we are still to finalize our capex budget for the next year. Once we decide on an expansion, yes, that could be funded by further capital. It could be debt.
All right, sir. Thanks a lot for joining in. That's the management of Snowman Logistics saying that FY19 will be profitable and the debt on their books is 140 crores. They're looking to repay that debt, but they still are awaiting some capex clearance. If that happens, they might go ahead and take some more debt. But there is important national news coming on your screen right now. Cauvery verdict. That is what is flashing right now. Karnataka will get additional 14.75 TMC of water, and the Supreme Court has directed the release of 177.25 TMC of water instead of 192. So they'll get slightly less. We'll try to get in more details. I think Ashmit has joined us on the phone line. Ashmit, what exactly is the verdict? What does it mean? Who is it in favor of?
Well, for now, what appears to be a very well reasoned order, the Apex Court, in fact, the Chief Justice's bench was the one leading it. The operative part, the key takeaway as far as we're concerned in terms of net, what effect it has is that this is in some ways a minor setback for the state of Tamil Nadu. Now, keep in mind that in 2007 is when the Kaveri Water Dispute Tribunal had come out with an order that the amount of water to be released from the Kaveri Basin by Karnataka would have to be 192 TMC. Now, what's important is that this saw a huge amount of litigation this over the last 6 to 7 years. But subsequently, now what we have is that the Apex Court has brought it down by 14 TMC. The allocation for Tamil Nadu now, as per the Supreme Court order, stands at 177.25 TMC. The additional 14 have gone to Karnataka. So this is, let's keep in mind, a hugely political issue as well. This will have far-reaching repercussions. This is an issue that goes back nearly 150 years. So a lot of concerns have been raised. But as of now, the big takeaway being that as far as Tamil Nadu is concerned, their concerns, at least as far as their claims were concerned, haven't been addressed. Supreme Court making it clear that the original order, the 2007 order, which allowed them 192 TMC of water, will now have to be brought down to 177.25 TMC of water.
Okay, all right. Thanks so much, Ashmit, for joining in and giving us those details. By the way, the Nifty's moved into the red, so not a very great Friday morning, actually. We have come off the high point of the day. All the frontline indices trading in the red. Our ticker team as well will get that alert up for you. The Sensex as well did move into the red, now trading more or less flattish. The Nifty Bank Mid-Cap Index, all of them struggling. All right, then let's get straight to our next management. We have BLS International who joins in. Well, those numbers are more or less a mixed set. We have with us Mr. Shikhar Agarwal, the joint MD of the company, who joins us. Hi, Shikhar. Thanks so much for joining in. Well, just taking a look at your numbers, for 9 months, you've done a good growth, 580 crores. That compares with around 440 crores. What are you going to end this year with, if you could help us out? And what are the total additions have you done, in the first 9 months of this year as well?
Yes, hi. So, yes, BLS has grown by 33% in the first 9 months as compared to the same period last year.
Yeah.
And our EBITDA level has grown by 160%. And at the PAT level, we have grown by 132% to 76.46 crores for the 9 months ended compared to last year. In this...
Okay, Shikhar, just hold on to that thought. I think we're getting some, officials' commentary in terms of that Cauvery case that we were just discussing. So let's hop across. Let's hear out what he has to say.
वो अलग है। अरे ये बंदा कौन है यार? ये माइक पकड़ लिया किसने? माइक पकड़ लिया। क्या बोल रहे हैं? भाई थोड़ा नीचे। अरे यार
people who have supported us, who stood by us in this bad time. Thank you.
Okay. All right.
I think there was a lot of ambient noise because of which, the key point was lost. But the point remains that, 177.25 TMC is what will be released.
They're getting some additional water. Whether or not it's enough, it's a year when, in fact, Karnataka goes to polls as well. So all those factors we'll have to keep in mind, and we'll try to get more, commentary. Okay, I think he's still talking, so we'll cut back across.
I feel the judgment upholds the rights of farmers of both the states of Karnataka and Tamil Nadu, and it's a very balanced verdict. I'm sure this will go a long way in bringing peace to both the states in Karnataka and Tamil Nadu.
So it's a judgment on middle ground. There's no one state that the Supreme Court has favored. So in the light
No, it is a very balanced judgment. Both the states should be a reason. There is a reason for both the states to be happy. The Karnataka has a special reason to be happy because our liability has been reduced by 14.25 TMC. The drinking water requirement of Bangalore have been fully protected at the moment. So we'll look into the whole judgment later. We'll give our detailed reaction. At the moment, we are very happy.
It's clear that no state can claim rights over an interstate river, and all states have to be dealt with.
We fully concur with the observations of the court.
What does it mean for the political?
No, Karnataka never claimed that. Karnataka never claimed that the water belongs to them fully. We always said that water should be shared. It was as a upper riparian state, we are willing to share. Whereas Tamil Nadu always pleaded for an archaic principle of natural flow theory, and the court has rightly rejected this archaic principle of natural flow theory.
Okay, all right. Then, that's some, a word coming in from post that judgment that we have. But I think we still have Shikhar Agarwal with us. Well, Shikhar, sorry, we are running short on time, but if you could tell our viewers, I think you were aiming at what, 18 million additions, 18 million registrations in this year. What is that number in the first 9 months? And if you could quickly wind up and tell us what kind of revenue numbers, margin outlook we're looking at.
So, hi. So, we have been constantly going at the same place, and we've been delivering 40% CAGR last 3-4 years. And this year also, till now we've done 33% CAGR, compared to last year. So, we believe that margins will go up going forward, and we will try to close this year also at the same pace of growth that we did last year. We've done 8 to 10 million applications till now, and we expect, as the last quarter is high quarter for us, we expect the application counts to grow when we end this year. So we believe that quarter on quarter we have grown 25%, at the PAT level we have grown 24%. We want to create and sustain the same momentum of growth. We are also thinking at inorganic sources of growth, wherein we are thinking at acquisitions also, and in the next year. So let us see.
All right, Shikhar, thanks a lot for that. Let us see. We'll keep touching base with you, running short of time today. But with that, it's a wrap on Chartbusters. You stay tuned to CNBC TV18. Trading Hour comes up next.